Aussie dips after RBA, yen pressured with the aid of rising US yields. Tokyo Australia's dollar erased early gains on Tuesday after the US of A's Reserve Bank brought in a expected half-point rate hike, however no longer the hawkish forward steerage that a few had hoped for. The yen slid lower back towards a 24-year low to the dollar on an upward thrust in U.S. Treasury yields, whilst the euro edged better, including a long way from 5-year lows. The Aussie ticked 0.09% decrease to $0.6820, after trading as excessive as $0.6895 earlier within the day. Both buyers and analysts had anticipated a second immediately 50 basis point hike on Tuesday. Governor Philip Lowe had mentioned ahead of the meeting that the selection might be among 1/4 and half-point boom, even though the U.S. Federal Reserve's 75 basis point growth closing month had fueled hypothesis the RBA may want to be greater competitive. We were given a small wobble within the Aussie as the assertion appears to confirm that if the RBA board did debate an alternative apart from the 50 basis factors we were given, it turned into the 25 foundation points that Governor Lowe flagged a couple of weeks ago, and now not 75 foundation factors, stated Westpac strategist Sean Callow. No closing minute FOMC-style swing to greater competitive tightening. Meanwhile, the U.S. greenback turned into up 0.4% at 136 yen and 23 sen, gaining help from a strong rebound within the 10-year Treasury yield, which jumped as high as 2.9780% in Tokyo on Tuesday from the bottom when you consider that May at 2.7910% on Friday. There turned into no trading in Treasuries on Monday, with U.S. markets closed for the 4th of July holiday, which also lightened volumes in currency markets. The dollar index, which measures the buck in opposition to 6 fundamental friends, changed into approximately flat at 105.15 after finishing Monday in large part unchanged. On Friday, it rose as excessive as 105.64, threatening the 2-decade top of 105.79 reached in mid-June. The euro, that is the most closely weighted inside the index, rose 0.15% to $1.0436 after ending Monday about flat. Over the past 2 months, it has been bumping in opposition to a floor around $1.50, stages not visible due to the fact that the beginning of 2017. The euro were given guide in a single day from an upward thrust in nearby yields after Bundesbank chief Joachim Nagel said the very accommodative stance of the European Central Bank (ECB) could hastily be abandoned and a restrictive coverage stance might be needed to gain the inflation goal. The ECB is gearing up to elevate interest fees for the first time in a decade later this month. The coverage outlook might not maintain the euro long-term though, National Australia Bank (OTC, NABZY) markets economist Topas Strickland wrote in a Be Aware to customers. Europe stays caught inside the middle between the Russia-Ukraine crisis and a weakening global economic system, he said. Given Europe's dire predicament, it is hard to see an enduring euro rally, which may hold USD energy going for longer.